Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, got some fascinating stories. First up, Coinbase tells us when the perfect time to buy cryptocurrency and my thoughts on this, as well as how I've been buying cryptocurrency over the last 2 years. Also, need to do a follow-up from a couple days story ago, which talks about JP Morgan and Goldman Sachs advise clients to not buy Bitcoin, claims industry exec, and we're going to talk about how not only do they lie here, but they've been lying for years, and half of the 1.5 million Ethereum mined in 2020 has been bought by Grayscale investors. And I can just tell you right now, if you don't think institutions are here, you're way off. They are here, they are buying up everything, and they are trying to tank the market at different sections so they can buy everything up for cheap. So that's what we have. Let's jump into today's market. So here we are, 9101. I don't think that's right. Let me refresh that. So 88.67, so we're just down a little bit, and it looks like Bitcoin's been fluctuating between this range, 88 to 9,300, which is way better than fluctuating between 4 and 5,000 or whatever we were at just like 30 days ago. So everything's still good, I think. Ethereum, XRP, everything's up. Well, everything's down a little bit, I should say. And just looks like that's been across the board, except for Maker for some reason or whatever else. Even our darling Digibyte is down a little bit, but look, Digibyte again was at less than a penny, and now it's almost hitting 2 cents. So congratulations, Digibyte, and all your holders. All right, so let's jump into today's stories. So first up, this is from the Coinbase blog. This is from June 7th, but what really piqued my curiosity was this one was from May 1st, just a couple days ago, and it talks about how Coinbase makes investing easy with dollar cost averaging. So you guys know, and you ladies know, that on my channel, I'm not a trader. This is not a channel for traders and technical analysis. I just don't get into it. What I've been doing over the last years, since 2017, is just dollar cost averaging because I don't like the volatility and I don't have the time to sit around and look at charts and trade and whatever else. But this is a great article. Not only just a great article, but a great thing that Coinbase is doing to bring people into the ecosystem as far as like the people that are there already. I mean, they could just sit around and just let people just trade all day long and not really care. But they're saying, look, if you want to make the best gains, probably what you want to do 86% of the time is just do dollar cost averaging. And if you want to trade, I mean, of course you can do that, but this is going to help you out. So this accomplishes in my mind a couple things. First of all, it retains customers. Second of all, it allows for the actual customer who is in here in a cryptocurrency feel good about it because they're like, hey, I'm not losing my tail like in some other platforms. And of course, on the other side, it's also good for Coinbase. Let's not deceive ourselves. If you are making a trade every single week or every 2 or 3 days because it's set up in the app, that's good for them because they have fees. But I'm okay with doing the fees if it allows me to offload one task that I don't have to do. And this is how I set it up. So they talk about here in the past, they've demonstrated how dollar cost averaging works out. But following the launch of recurring buys, we're now making it easier for you to learn about DCA directly in your iOS and Android mobile app. So what I want to do is I want to jump into my phone and I want to show you what they're trying to talk about. But if you don't know, you can just do it essentially like this. You can set up a buy, sell, a buy every single week. And that's what I do every single week. I just put it into buy and it automates everything. So let's jump in and we'll take a look at what they're talking about here. So here we are on my phone and we're in the Coinbase app. And you know, this is basic stuff. It's got all the different prices right now. Chainlink, Chainlink down. God, everything's down. Look at that. XRP, Tejos, Ethereum, Bitcoin Cash, and Bitcoin 8851. Anyhow, it talks about top movers and whatever else. But down here is the most important thing. So do more with crypto for earn rewards. If you click on that, you can send to all your contacts your referral code, and you guys both get $10. So I would definitely do that. But this is the one. There's 3 actually. GiveCrypto.org. But what we're talking about is the daily, weekly, or monthly, which is invest in crypto over time automatically. I think it's pretty cool because it allows it to like just go through like a little thing. So when's the best time to buy crypto? No one knows for sure. But rather than time to market, dollar cost average. And like we talked about, simple strategy, just invest over time. Price goes down, you'll buy more crypto. Price goes up, you'll buy less. Of course, sure. I just kind of keep it the same. I don't really care. The result over the past 5 years, buying Bitcoin every week performed better than trying to time the market 82% of the time. And it just says ready to invest with DCA. And then you just click on that invest weekly and then off you go. And this is exactly how I do it. People have been asking, so this is how I do things. I set it up. And since 2018, I've been dollar cost averaging every single week. Sometimes when I started out, it was like 25 bucks a week. And I would put that into like one or two of my assets. And then as time has gone on, I've increased that a little bit here and there, but it's every week. So if you think about it, for all your traders out there who love to trade, good luck. But think about how well you would have done possibly if you would have just said, okay, 2018, I'm going to put in 25 bucks into Ethereum. How much would you have? Or let's say 100 bucks into Bitcoin or whatever over the last 2-3 years. I think you would have done pretty well. So I always see dollar cost averaging as the safest, easiest way, and I got other stuff to do. So that's why I wanted to share that. All right, so I hope that helps. So look, as far as like investing goes, you can invest and you can trade. Me personally, I don't see the majority of traders that I talk to, they get wrecked a lot. So if you want to do a little trading, sure. My recommendation is to make that a small percentage and not do too much. Just slowly invest. I know it's boring. It's not very sexy, but the outcome is, and that's all I can tell you. All right, let's move on. So next up, we did a video a couple days ago, Bitcoin warning, and we took a look at a lot of different things. And there was an article that I talked about which said that JP Morgan and Goldman advised clients not to buy Bitcoin. And it kind of concerned me. It actually made me pretty ticked off because I truly believe that in the background, they are just accumulating like crazy. And there was a video sent to me. This was by Royden Jeffrey. I want to say thanks to him because this was a video about a year ago or so, a year and a half. And it has Tika Tiwari, which you guys know is that guy that does the Tika's 5, whatever coins to 1 million, which is whatever. I'm not going to get into that. But he was on the Glenn Beck show, and he really breaks it down pretty simply about how these institutions really screw everybody. And there's the first section, just a minute and a half, and the other one's another minute and a half. And it just really just perfectly explains what has been going on for decades. And it just shows you what's happening. So let's take a listen.
Transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid 90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, this is just a market for idiots. Mm-hmm. Nobody should be buying this stuff. Mm-hmm. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
So two things. First of all, just listening to that, you should be angry. You should be angry, and you're right to be, because they've been doing this for decades. I mean, just forever. And it's not right, but it does happen. But now you know exactly what's going on. The second thing is that you should feel better about your positions. Now, I know over these last years, you probably have looked at your portfolio dwindle. and you've had your friends and family question exactly what you're doing because it seems so odd that you invest into that. Well, guess what? The same thing happened back in the 90s when people were asking, why are you into .com? That's not going to take off. Who's going to use the internet and the infrastructure and then the prices? I mean, it's just ridiculous. That's so stupid. Put yourself into something a little bit more stable, and look what happened. If you just would have stuck around, you would have been okay. Especially like all the early investors into, I don't know, like Amazon, like Google, like Facebook. Where would they have been now if they hadn't been lied to and shook out by all these different institutions? So you must have to feel a little bit better about your positions. Just stay going. And I think the next section is going to cement exactly what I'm talking about.
Institutions were buying. And then the dot-com crash in 2003. If you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected. A lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, the largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
So here's my question to you. First of all, how do you think, or do you believe that this should be illegal, manipulation of the media cycles to get an upper hand? And second of all, do you believe that these institutions are buying in the background and doing massive manipulation to all different areas so they can buy in cheap and grow things like crazy? Let me know what you think in the comments section. I have my opinion, obviously, but that is what it is. I will say one last thing, and that is that I just saw the Berkshire Hathaway live stream, and Warren Buffett just revealed that he has dumped or offloaded, or however you want to say it, all of his stocks for airline. And he had put in billions and billions of dollars, and at first he had said, no, we're just offloading a couple, like 10% or so. But now it's been revealed, because it has to be, that they're all out. How much manipulation actually is going on, or is that manipulation? And yeah, that's my question for you. But I will say this, last thing, is that as far as institutions being here, if you just look around and we open our eyes, we have Fidelity Digital Assets, 2.4 trillion assets under management, of billions assets under management. We have Ameritrade, 1 trillion assets under management. We have Van Eck, who just put out this report in January 2020, which talks about how gold is far, far inferior to Bitcoin. And these are the people who are seriously big gold bugs and talk about it. And they, I can guarantee, are buying everything up. And then we've also had reports of the NASDAQ. They're getting into the digital assets marketplaces, and they're trying to put their toes in the water. So if we talk about institutions and them manipulating and do these things, at some point they're making it pretty public, but behind the scenes, like if we just saw, like with JP Morgan and Goldman Sachs, I don't believe them for a second. Anyhow, moving on. So last up, half of the 1.5 million Ethereum were mined in 2020, bought by Grayscale investors. So Grayscale institutional buyers have purchased close to half of the ETH out of the cryptocurrency total supply since 2020. How do we come to this number? Well, the calculation provided by the Redditor shows that about 1.56 million ETH has been mined between December 31st, 2019 and April 24th, 2020. Meanwhile, during the same period, Grayscale issued 8,025,200 shares, which correspond to about 756,000 ETH at 0.094 ETH per share. So thus, Grayscale investors have bought 48.5% of the ETH mined in 2020 This massive ETH appetite among the firm's clients is despite the massive 420% premium on Grayscale's Ethereum fund. Now, if you're not familiar, Grayscale, what they do is they have a Bitcoin fund, an Ethereum fund, they have an Ethereum Classic fund, an XRP fund, all different types of funds and different baskets. But what they do is they offload the requirements for these institutional investors, where they partake in custody, and they do all the different things they need to do. So essentially, all these guys have to do is just put in money. And they have seen how much money is going to be made that they're like, oh, there's a 420% premium or a 4x premium. No big deal. We'll pay that, no problem. And they've been doing it for a very long time. Let's take a look. Oh, this is, I'm going to link this in the comment section or the description. Bitcoin's quantitative tightening versus central banks' quantitative easing. It's a great report by Grayscale just put out. And they're pretty much saying, look, because of Bitcoin's deflationary nature, it's actually better than this QE that they were going through. But this is the report I was going to talk about. This is the digital asset investment report for Q1 2020. Grayscale has 2.2 billion assets under management, just a little bit. And this was the first quarter of 2020. The majority of investment, 88%, came from not people like you and me, institutional investors dominated by hedge funds. In the last 12 months prior, majority investments, 79%, came from institutional investors dominated by hedge funds. So I cannot make it any more clear how institutional investors are here. They are, well, not all of them. Some of them are smart money, and they realize that there is such an amazing opportunity here that they're okay with paying 4x now just to have someone deal with the regulatory issues, because they know exactly what's going to happen, and we just saw it over the last 15 minutes or however long this video was. So that's it. So look, this is a shorter video. Good, because sometimes we do them way too long and it's Sunday. So let's just take a break, relax. Let's see what happens with the markets tomorrow. I think there's going to be a lot of losses in traditional markets, but we'll see. Anyhow, two things. First of all, thank you to my man, All Rights Off, for being a premium member. Just so you guys know, we have a Join Now button underneath. It's not much. It's just if you want to, it's less than $2, and it goes to help support the channel. And when we do these live stream premieres, which we're doing a lot more of, you get your own little badge and whatnot. So just goes to help out. I don't hold anything back, just something to do. And then also, if you like these types of videos, there's going to be two more that's going to pop up on your left and right, and you can check those out. I'm definitely going to link to the one that we just took a look at with Tika, and that'll be a good one to watch. So that's it for today. So thanks for watching, and I'll see you on the next one.